kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
All right, let's get started. Welcome, everybody. We have a couple of new things that we're launching. Let's suggest a daily brief where we gather news that are important for real estate investors to know. And it's refreshed every day. And highly encourage you to save, scan this QR code, save it, and kind of come back to it on a daily basis, just to stay on happening in the real estate investment world today. We're also going to have a keynote that talks about, how do we kind of digest these these headlines, and what the news are. So really look forward to sharing those key points with you. Okay, now our foreclosure data coverage is now in 23 states. Okay, we're almost kind of going from East Coast to West Coast. The green states are the ones that we have operational and in production, and the yellow states are a little harder to mine the data, and we're actively working on kind of getting these. So if you're investing kind of naturally, or if any of these states you are currently in and you are actively marketing to these markets, give us a call. We'll get you the motivated seller data. All right. And if you're not aware already, Real Estate IQ is the website where we list all our classes, our current deals, and everything. And so you can check out the what's new on the website. I'm going to skip over our successful testimonials. Quick disclaimer: everything that we share here are case studies, right? It's for education purposes only, and every deal is different, every case is different, every story is different. So you should always do your own due diligence. And at least in this session, we don't offer investment, financial, or legal advice. Maybe in private, we can kind of share some of our experiences, but here we're not offering any of that advice, only experience. And if you need help working on closing a deal, if you're looking for a deal, you can email me, and I will either match you with the right deals or match you with the right resources to help you move forward. Okay, so let's start with our weekly market update first. We got some really cool news. So, Texas A&M published the Real Estate Center published a piece that talks about what a lowering mortgage rate could mean. And this is a recent analysis, right? I think it's about a week old or so. They talk about, falling mortgage rates, how that's gonna, impact us as investors. And especially when the mortgage lock-in effect is beginning to ease, right? So we have, in fact, I have been talking to sellers and distressed sellers that initially locked in their mortgage and relatively higher rate. If we define 6-7%, it's kind of a little bit higher rate for now. They were expecting the rate to drop. And since the rate stays elevated, that puts them in a bad spot, when life happens, right? Some hardship happens. And so it locks them in to that particular situation, and that's why they're distressed. Anyway, so more buyers are gonna qualify if the mortgage rate drops, and it's also gonna increase home purchase activity. So right now, the distressed sellers are kind of in a tough spot because they have high interest rate, they have a high monthly expense, and they need to sell. But because the rate is high, it's also affecting buyer demand as well. So something to kind of stay on top of. Now, when the rate lowers, because it's gonna increase the buyer demand. Also, there's homeowners that are that have been holding on to their property because of the anticipated lower demand. They may also start putting these properties on the market. So lower rates is gonna be interesting because it's gonna increase new acquisition opportunities for investors, but there is also gonna be a higher competition. Okay, next, state economies, depending on which state, of course, it's kind of varies depending on which state we're in. We're seeing that some state economies are continually to grow. So, for example, according to the United States Bureau of Economic Analysis, 47 out of 50 states have recorded real GDP growth in the first quarter of 2026. Washington State led the nation with 4.5% GDP growth, while South Dakota, Nebraska, and Iowa are experiencing economic contraction. So even though we are, as a whole, the United States economy is on the growing path, the regional performance is gonna, depend on the strength of industry, right, in the local state and the local market, the technology investment, manufacturing, agriculture, and consumer activity. So for us in real estate investors, a stronger state economy often will translate to a healthier job market and increasing housing demand and improve investment opportunity. So we want to kind of stay on top of the states that are growing. Now, if you're interested in seeing which specific state has the growth and what the growth looks like, we have a link here. So you want to make sure you scan this QR code and read this further. Next, so the U.S. housing market is showing signs of rebalancing. Inventory has reached its highest level since before the pandemic, and in fact, this summer has been kind of strange. We're seeing increased inventory on the market, and the active housing inventory has remained 1.1 million nationwide for 5 straight weeks. That's the longest stretch since 2019, right before the pandemic. New listings continue to enter the market, and what this translates to is it gives buyers a lot more negotiation power. And while the inventory is improving, the affordability is still a challenge because of the elevated mortgage rate, and we're seeing many sellers are reducing their asking price and offering concessions. So the current environment for investors is that there are more opportunities to find motivate sellers and acquire properties, and you have more negotiation leverage. Next, let's look at some of the deals, right? Speaking of, more negotiation leverage, want to feature some newer deals that we have in our, I guess, offerings. Okay, a couple of deals here that we have prepared for you. So we got this deal. It's a subject to property. It's a subject to deal. There is not much equity in the house. In fact, monthly cash flow is kind of okay for a long-term rent. You may be able to turn this into a furnished finder or pad split because there are 4 bedrooms and 3 bathrooms in this property, and it's about 10 minutes from UNT. So if you're kind of close to the Denton area, you may find that this could be a very interesting property. And I took a visit to Denton County and and saw the house and kind of the surrounding area. I do see a lot of growth opportunity, just being in this county, and so very interesting. The property itself has a low enough mortgage where the monthly payment is quite it's still good. It's quite low, and then what we need to kind of pay attention to is the second lien positions, the HUD liens and the partial claims that we'll be assuming as a sub to, and based on kind of the growth trajectory of the market value, what we're seeing is that this sub 2 could be an opportunity if you plan to hold this for long term, and there's still some equity in this property. Okay, so sub 2, if you're interested in holding sub 2s in Denton, this is a prime opportunity. It's actually right next to an elementary school that is very highly rated. All right, this one is in New Caney. The existing mortgage is 15 years, and so it has a high monthly payment. So what we will need to do is to kind of look into turning that into a 30-year or 40-year loan to make the cash flow work. And it's a new build, everything is kind of move-in ready. So that's the advantage of this one. All right, this is also a sub 2. It's in Cleveland, Texas, which is the southeast area of the Houston metro. We're also seeing that from a pad split, a furnished finder, there's a lot of income potential. There's no major repairs. You may want to do some deep cleaning on the carpet, right? Repaint the house, and it's pretty much good to go. There is existing financing in place. Really good financing interest rate too. Okay, this one is it's gonna be a cash deal. It's listed. It's asking for under the ARV, and it's a duplex with 2 units, one front, one in the back, and then there's room in the middle for placing a 3rd unit there. So good income opportunity. If you're looking into that, that's a prime opportunity. We already got quite a bit of interest for this property. And then we also have one in Riverview. There is some equity in the property, and it's available. So if you're in Florida or investing in Florida, this could be a very interesting opportunity. 4-bedroom, right? Also, I think 3x2 is a good standard. If it has more bedrooms, I think it would create more opportunity for a pad split type of income generation. In fact, I already got some interest. Folks from Europe is trying to move to Florida, and they're looking at this particular property. Okay, these are some of the existing properties on our list. Huntsville is already sold. Freeport. Fouchier, that's pending. Oops, where's the other one? Okay, this one's pending. So I'm going to skip over this. If you're interested in kind of seeing the full list, you can send us an email, and then we're going to send you a link with all these properties on there. All right. Okay. So from a deal standpoint, there's also more. We are marketing. We're helping a hedge fund move their opportunities too. So these are the ones that the hedge fund has in their inventory, and these are acquired at the foreclosure auction. So they usually would purchase it at a really good price, so that as an investor, when you purchase it, you can still there's still enough margin for you. So these are the inventory here. Okay, we're gonna skip over some of these programs. Obviously, you're interested in doing deals. You probably have already heard about our Deal Accelerator and Deal Partners program. If you haven't heard of it, just feel free to reach out. I do want to focus our attention today in our key topic, which is kind of how we monitor the economic news and how it's affecting the real estate investment game, and how we interpret the news and the data, right? Because a lot of times we see the headline, and if we don't have time to dive in and kind of read into it, then what does it really mean? So we want to kind of dive into some of these key news together. And I'm also thinking that if you are interested, we can do this kind of weekly dive on the notable news, because we're kind of pulling together a lot of these news pieces, and just doing a deep dive on each of these, so we have a good idea of what's happening and how is it affecting what we're doing. So let me pull this up real quick. Okay. All right, so today's message is simple. All right. Real estate doesn't move by itself. It responds to the jobs, or how the job is doing in the local market, the availability of capital. That's why we monitor the interest rate a lot. Household finances, right? The mortgage rate, the federal interest rate, which is somewhat kind of related to the mortgage interest rate, and then also the available supply. So as an investor, our job is to connect all these forces, right? Connect these dots before they show up in the property level data, right? Because when we see it from the property sales and all those information, that's already manifested from the economic numbers. So the questions we want to keep asking is, where is the housing demand strengthening? Where is it weakening? And what does that mean for our next investment decision? What does that mean for our current portfolio? And what does it also mean for our next investment decision? And to answer that, we're going to need a better way of reading the news and more than just the headlines. So we should be looking at news in 3 different layers. Every headline needs to pass through 3 filters. The first filter is, what is happening? What is actually changed? And then the second one is kind of look at, okay, what type of asset? Is it tenants or landlords or whatnot, right? Or market? Like, what is being affected here? Is it a type of asset, or is it affecting our tenants? And then also, what should we continue to monitor before we act? Because the last thing we want is to make a rash decision based on reading one news or whatnot, right? We want to kind of continue to monitor and kind of see that trend is truly settling before we actually act. This is going to prevent us from, I guess, looking at an interesting headline to and making a decision to, like, hey, this is something that's actually this is a true signal that we want to act on. So as an example, home sale falling. Okay, that's our current kind of headline that we see a lot right now. Is not yet an investment conclusion, right? We need to know if the problem is about affordability. We need to know about if the problem is about the current inventory. Is it the buyer confidence, or is it something about the transaction, the velocity of transaction? And there's all kinds of other kind of acts or news, right? There's a new housing act that's supposed to address for affordability, which we are currently monitoring. But how is that affecting the local trend and where we're investing? Right? It's good to kind of stay on top of what's happening. Maybe sometimes it makes sense to start taking action now, knowing that it's gonna happen. But I always kind of caution on, let's continue to monitor what's happening, and there will come a time where it's like, okay, it makes sense. Like, let's start acting, and like when we act, let's act fast. So our first real signal this week is about transaction velocity. Right? Redfin has reported, and this is one of the articles that we have in the daily brief. Redfin has reported that the pending home sale has fallen to a 3-month low, and new listings will continue to be near their lowest level of the year. And that combination matters, right? Because there's one piece about pending home sales, and then there's also new listings. So there's not a lot of properties going on the market. The market is slowing at a point where the sellers are also hesitating on putting on the market. Now, this doesn't automatically mean that demand has disappeared. It can mean different things. Maybe the buyers are hesitating, right? They're unsure about how the economy is doing, how it's going to affect their personal life. The sellers are testing the market. It could also mean that financing is difficult, right? The mortgage rate has stayed elevated, and both sides are kind of waiting for a better condition to do either buying or listing. So for for us as investors, the key insight is that there is liquidity risk here, and that happens before the price risk, which is kind of the dropping of the price. A property may still be worth roughly the same amount, but if it takes longer to sell, right, it needs more concessions, and it attracts less qualifying buyers because of the interest rate stays elevated. So a couple of practical metric, right, that we want to watch for, right, is down here, talking about the time to contract, what kind of price reduction we're looking at, seller concessions, and what is the buyer pool, right? How big is the buyer pool, and not just the median price. So now if the transactions are slowing, then the next question is whether new supplies are eventually gonna, come up and either relieve the kind of the gridlock, or is it gonna create a different problem? So that's what our next piece is. Okay, and this is a report from NAHB, and they're looking at housing, but it's split to two parts, right? And in general, we have multifamily, apartments, right, and single-family housing. So what this report is saying is that multifamily has been, I guess, keeping up with the overall housing starts, but single-family construction is still slow. And that's very important in terms of distinction, because if we say like, oh, in general, housing start is up, it can be very, I guess, misleading if we are just looking at just the overall amount of housing. Because if we're talking about more apartments are coming into the market, that's going to increase competition on the rental side and put pressure on the rent in some of the markets. But if we are still, looking at limited single-family construction, that's gonna still affect the affordability, right? Because there's just not a lot of supply in the single-family sector. So a rental investor should be asking, where and when are these apartment supplies coming up, right? Is it in my market, and when? And a single-family investor should be asking, is the ownership inventory still constrained? We're seeing also news where there are hedge funds that are unloading their rental portfolio now because of the new legislation that limits how many units they can hold. And how is that going to affect the housing market? Because these are rental, they're held as rental properties, and now they're selling it. Are they selling it to another investor that's going to keep it as a rental, or are they going to keep it, or are they going to sell it to a end buyer? Okay, so the asset class and the market is also going to matter. So we want to look into one layer deeper at least than the headline to really kind of decipher these signals and how it affects how we invest. So if construction tells us about future supply, but then supply will only work if there is enough demand, right? So let's look at the demand. We always look at both sides. So Realtor.com has a news about new tension in our economy, where data center construction is supporting regional economies. Now, that may sound good, right? Because a new data center can create job, right? Increase capital investment, but that doesn't really guarantee that there's housing demand. The important question is, who's going to benefit and when. So first, it's the contractors is going to benefit first, right? The folks that are building the data center. And then the landowners may also benefit. Employers can, there's going to be more employment and then create more jobs. And then the local employers can also benefit as well. But household demand can still stay weak if affordability is affecting that. And then there's also a low consumer confidence. So economic boom just in the data center area, if we only solely look at that, it could lead to overbuilding. So that's something to kind of pay attention to. And as investors, our takeaway is to kind of pay attention to, okay, who gets paid? Who is, based on this, who is going to rent or start renting or start buying? And how durable is this demand going to be after this construction period ends, right? And is it going to be long-term? And once we understand the local demand engine, right, how this local demand works, now we want to look at the financing environment. So we always look at the mortgage rate. So mortgage rates is, basically, we kind of cover this in our market update too. A rate decline is going to activate a couple of things, right? Payments is going to get lowered with a lower interest rate. And locked-in owners is going to be able to list. And then we're also going to have a bigger buyer pool. And then we're also going to start seeing increased competition. And we're not going to have as much leverage in pricing and all that anymore. So for investor, this means that if the rate stays high, there are going to be lower transactions. We're going to have more motivated sellers, and then we're going to have better negotiation. We're going to be able to close more deals, or at least put more deals under contract. But if the rates fall, then you're going to have more buyers competing for the same inventory, and the sellers are not going to be as responsive to our distressed offers. So the important question is not necessarily is the rate going to continue to fall, but who's gonna move first, and would that increase or decrease the inventory? Okay, so you can read more about this article if you just kind of scan the QR code. So one of the kind of headlines here is we also talked about the state GDP data, right? Employment and GDP data. So what we should be asking here is, are the jobs growing, or are there going to be more jobs, or are there going to be less jobs? Is the economic what we're seeing, is it concentrated in one industry, or is it kind of spread across the multiple industries, which is going to be more durable? And also, is housing supply matching what's happening in the economy? So just a headline about a growing state or a metro, it's growing, it's a good signal. The question is that growth gonna produce more renters, right? It's gonna create more jobs. It's gonna produce more renters. It's gonna have more folks that want to buy houses. Are there gonna be high income professionals, service workers, or is it gonna be a temporary construction labor like the data center that news that we just saw? So the better process is kind of form a question, right? All these questions that I brought up, and then kind of start looking at the local employment and the local GDP information. You can look at the rent, vacancy, and permits data to see if all that national news is gonna, I guess, affect your local economy. Okay. This is an interesting news, right? In San Francisco, we're seeing prices are now more than $1 million, And in fact, there's some news about sellers are taking AI company stocks as part of a payment to kind of keep I guess as a way of payment. So you don't necessarily need the financing and the cash, but if you have the AI stocks, you can be basically bankable. You can use it to pay for the houses, which is a very interesting thing for us to kind of observe, and also for the tech workers. Now, at $1 million is still, hardly affordable. So, I think, something to kind of pay attention to is, the price is high, but is this affordable? Is it affordable to the general population there? And just because, I guess this is a very interesting headline. How do we, is that kind of investable? Is that investable news? So, kind of to start summarizing, we want to look at each headline into questions, right? And a lot of times the headline doesn't really tell the story, maybe just kind of clickbaiting. So we won't need to read the actual article. How is it going to affect demand? And, is it going to bring us more buyers or tenants? And then also, how is it going to affect the supply? If it's single family as an asset, are there other type of assets that compete with it? And how is that doing? And we want to look at exit strategy. Who's going to buy this property from me in the future? And what evidence is going to kind of create risk to me? So those are the things that we want to look at. And the best investors are not necessarily the ones with the most information, but really kind of how do we leverage this information to form the insight to make a good decision? And that's the purpose of our daily brief, right? The idea is that we have kind of daily news that affects the real estate investment world, but also some opinion pieces too for you to kind of read and make your own decision, right? The opinions is only an opinion, right? Your opinion may disagree with our opinion, but it's something to kind of stay on top of, so we can continue to practice and form our own opinions. We have a QR code here. You can continue to scan, and it's probably the same one for all the slides. And I highly encourage you to look into this on a daily basis, so you can stay on top of how the market is doing, how the economy is doing, and how it's going to affect you and your investment your investment decisions. Okay, so that's our talk today. Let me pull up the remaining slides. Okay, so if you have questions or comments, you can feel free to share that. And then we have upcoming classes and events, right? Want to stay educated. We're coordinating a speaker to join us next week to teach us about subject to. As a subject to buyer, why is that effective for me? Why is that attractive for me? Why do I want to buy subject to? As a deal maker, how can I approach a motivated seller and I guess basically explain the advantage of how we can help them. And then also we have all these classes. Okay, with that said, that's all we got for you today. It's always about taking action. We got enough information. It's about taking fast action too. Take action and take it quickly. And you can start your real estate journey with us. So thanks for joining us today. And we hope we're going to see you next week. Thanks, everybody.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.